Welcome to Cybersecurity and Finance. In the next few minutes, we'll walk through the unique cybersecurity challenges facing the financial industry. You'll learn about the threat landscape targeting banks, insurers, and fintech companies, the regulatory requirements from PCI DSS to DORA and SOX, encryption and secure transaction protocols, fraud detection and prevention, and how to build a cybersecurity program that meets the elevated expectations of financial regulators. Let's get started. Let's start by understanding why financial institutions are the most targeted organizations in the world. Financial institutions face a concentrated set of high-impact threats driven by the value of financial data and transactions. Ransomware is devastating for financial institutions because every system that goes down has direct financial impact. Trading halts, payment processing stops, customers lose access to accounts, and regulatory reporting fails. Attackers specifically target financial institutions because they know the organization can pay and that the urgency to restore services creates pressure to pay quickly. SWIFT and payment system fraud targets the interbank messaging network that moves trillions of dollars daily. Attackers compromise a bank's SWIFT credentials to send fraudulent transfer messages. The Bangladesh bank heist attempted to steal nearly $1 billion and successfully moved 81 million. These attacks exploit the trust inherent in interbank systems. Insider threats are particularly dangerous in finance because employees have legitimate access to high-value systems and data. Rogue traders, account manipulation, customer data theft for identity fraud, and collusion with external criminals all exploit insider access. The financial industry's extensive regulatory requirements for monitoring and controls exist largely because of this persistent threat. Financial institutions depend heavily on third-party technology, trading platforms, payment processors, market data feeds, and cloud services. A compromise at any of these providers can affect dozens or hundreds of financial institutions simultaneously. DORA specifically addresses this risk by requiring financial entities to manage ICT third-party risk comprehensively. Financial cybersecurity operates under constraints and expectations that exceed general cybersecurity practice. General cybersecurity follows a risk-based approach where organizations have significant discretion in selecting and implementing controls. Regulatory requirements vary widely. Incident response operates on a timeline of days. Security investment is justified primarily through risk reduction and basic compliance requirements. Financial cybersecurity operates under prescriptive regulatory requirements that mandate specific controls, not just outcomes. Organizations must comply simultaneously with PCI DSS, SOX, DORA, GLBA, and potentially dozens of national regulations. Incident reporting timelines are measured in hours, and the stakes are existential. A major breach at a financial institution can trigger customer exodus, regulatory sanctions, and in extreme cases, institutional failure. Now let's cover the security controls that are critical for financial institutions. A comprehensive financial cybersecurity program operates across 4 domains. Transaction security protects the financial operations that are the institution's core purpose. End-to-end encryption ensures transaction data cannot be intercepted. Tokenization replaces sensitive card data with tokens that are worthless if stolen. Multi-factor authentication adds verification steps for high-value transfers. Real-time fraud detection uses behavioral analytics and AI to identify suspicious transactions before they complete. Data protection safeguards the customer and financial data that regulators and customers trust institutions to protect. Encrypt all sensitive data at rest and in transit. Deploy data loss prevention that monitors email, web, endpoints, and cloud services. Monitor database activity and log all access to sensitive data. Classify data according to regulatory requirements from PCI DSS, GDPR, and national data protection laws. Threat detection for financial institutions requires continuous monitoring. Operate a 24/7 SOC with analysts trained in financial threat patterns. Deploy SIEM with correlation rules specific to financial fraud, unauthorized trading, and payment system anomalies. Consume threat intelligence from financial sector ISACs. Conduct red team exercises that simulate the specific threat actors targeting financial institutions. Regulatory compliance in finance is non-negotiable and complex. PCI DSS governs payment card data protection. SOX mandates controls over financial reporting integrity. DORA requires digital operational resilience testing and ICT risk management. Add national banking regulations, securities regulations, and data protection laws. A unified compliance framework that maps controls to multiple regulations prevents the duplication and gaps that separate compliance silos create. These concepts are specific to financial cybersecurity and critical for anyone working in the sector. Tokenization replaces sensitive payment data with tokens that preserve the format but have no value if stolen. A 16-digit card number becomes a 16-digit token that looks like a card number but cannot be used for fraud. Tokenization reduces PCI DSS scope because tokenized data is no longer considered cardholder data. It is one of the most effective techniques for reducing financial data risk. FSISAC is the financial sector's primary threat intelligence sharing organization. Member institutions share threat indicators, attack patterns, and defensive strategies in real time. During active attacks on the financial sector, FSISAC coordinates the industry response. Membership provides early warning of threats targeting financial institutions and access to defensive playbooks developed by peers. Operational resilience goes beyond traditional business continuity. It requires financial institutions to identify their critical business services, set impact tolerances defining the maximum acceptable disruption, map the technology and third parties that support each service, and test their ability to remain within impact tolerances under severe but plausible scenarios. DORA makes this a regulatory requirement for EU financial entities. Behavioral analytics models normal transaction patterns for each customer and account, then detects anomalies in real time. A customer who normally makes small domestic purchases suddenly initiating a large international wire transfer triggers an alert. AI-driven fraud detection processes millions of transactions per second, catching fraudulent activity that rule-based systems miss, while reducing false positives that frustrate legitimate customers. Let's close with the most important lessons for cybersecurity and finance. First, financial institutions are targeted by the most sophisticated threat actors in the world. Nation-state groups, organized cybercrime syndicates, and sophisticated insider threats all target finance because the potential payoff is enormous. Security programs must be designed to defend against capable, well-resourced adversaries, not just opportunistic attackers. Second, regulatory compliance is the minimum standard, not the goal. Meeting PCI DSS, SOX, DORA, and national requirements is necessary to operate, but does not guarantee security. The most secure financial institutions exceed regulatory requirements because they understand that compliance frameworks lag behind evolving threats. Third, speed is critical in financial cybersecurity. Fraudulent transactions complete in seconds. Ransomware can halt operations in minutes. Payment fraud can move millions before manual review catches it. Transaction security, fraud detection, and incident response must operate in real time with automated controls that act faster than human analysis. And fourth, operational resilience has become the standard that regulators worldwide expect. DORA formalizes what regulators have been moving toward for years. Financial institutions must not just protect themselves, but must demonstrate the ability to continue critical services through severe disruption. Build and test your resilience capability proactively. That wraps up our overview of cybersecurity and finance. In the full Udemy course, you'll get 18 detailed lessons covering the complete financial threat landscape and defense strategies, encryption and secure transaction implementation guides, fraud detection and behavioral analytics frameworks, and regulatory compliance mapping across PCI DSS, SOX, DORA, and national regulations. Click the link below or scan the QR code to enroll and strengthen your financial cybersecurity. Thank you for watching. If you found this overview helpful, subscribe to the channel for more content, and check the description for the link to the full course. See you in the next video.